Hello traders, Gary Wagner here just before noon in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday as we say on the islands. Last trading day of the month, August 30th, 2019, and this is the daily report for gold and silver, our weekend review, and what a week we have seen with precious metals surging at the beginning of the week, gold selling off modestly as we went into the close today after a $14 plus decline yesterday. That all in light of silver continuing to move to higher ground. In fact, in terms of a monthly performance, we had silver definitively outshine gold with almost a doubling of the percentage gains. Gold gained about 6%, silver gained 11% on the month. Quite interesting. We'll talk about that when we pull up our charts. We'll also look at palladium today because gold did close lower today, off by $7.70, and is currently fixed at $15.2920. That is actually below the current price of palladium futures. We'll get to that in a second. When we take a look at spot gold, that lost about $7.38 and is trading currently at $15.2034. That's all in light of a dollar that was substantially stronger, almost at 99. However, when you look at the net gain in the dollar index, which is 0.30%, and then look at the net decline in gold futures, which is 0.50%, you can see that the combination of dollar strength and selling contributed to today's lower pricing. But the same cannot be said of the other precious metals. We had big moves in platinum and palladium, $18 gain in platinum, $936.20, about 1.75%. But the biggest mover in terms of percentages today has to be palladium futures. $15.31, so about $1, $2 above the current price of gold, and that's after accounting for a 4% rise that amounted to $59.50. And finally, we'll take a look at silver. Silver continues to buck the trend, a solid monthly performance, and you can see that on this monthly candlestick, up almost 16 cents, and is currently fixed at $18.48. Traders, let's take a look at our technical studies. We are looking at a weekly gold chart, continuous contract in candlestick format. And when we look at the month that has ended today, we can definitely see that we had the vast majority of weeks, these last 4 weeks, contain gains on the week. That was up until this week, as designated by this red candle here, which is almost a shooting star. But what is most interesting to me is that from the last 2 months, we have used a Fibonacci extension. The extension started at 66 to 1390, and then we plotted a move from 1266, which was the beginning of this wave that we believe is a third wave. That being said, we targeted the number 1561.70 as a potential top to the market. It is a 1.618% extension, and we put this in before we actually reached this particular price point, which occurred this week. The fact of the matter is, it reached the price point earlier. I believe it was 1565 or 64 is the high, and it definitively sold off, closing at 1529.20. That being said, it does indicate a potential top that has a higher probability than before this week came in and went out with lower pricing, but we will have to see how the market reacts next week and into September. Realize we have the next Federal Reserve meeting occurring next month, and we also have the trade war, which had a turn of events the other day, but doesn't seem as accommodative in terms of a resolution or de-escalating it with statements made today by the current administration. Now, we will go into this weekend flat with no active trades. We did pull profits the other day. We got in at 15.24. We got out at 15.32.13. The net profit on the trade was $813 per contract, which results in approximately an 8% gain on the trade. I want to see, as the dust settles, whether or not this is the beginning of a defined correction, and if so, we'll talk about where it could go, or simply a market consolidating. And if in fact we do see a correction, and I believe we have a fairly high likelihood that that will occur, we could see this market trade as low as $14.95. That is the 0.23% retracement, starting from $12.65 up to $15.64. We also have what I call a Fibonacci harmonics, in that the 1.23 extension is literally $5-6 away from that price point. So that tells me that that is a pretty strong area that we need to look at. If in fact we get lower pricing, we're only about $30+ away from that price point. And the way we've seen this market trade, that could occur in a very short period of time. But it has been silver that has stolen the thunder when we compare the price gains against platinum, palladium, and gold. Although platinum and palladium recovered briskly over this last week. We're looking at a weekly chart. We can see that silver closed at 1834. But one thing that I find is interesting is the last time we were at this price point. Because with gold on Tuesday, we hit a 6.5-year high. However, when we look at silver, we need only go back to this candle right here, which occurred in April or May of 2017. So it's really a high that occurred 2 years ago. That I find interesting. The other thing is the acceleration that we saw, and to really see that, we want to convert this into a monthly chart. And although there have been other months that had a significant price move similar to this, we haven't seen this type of price move in a single month since these candles here that came in at about 2016. They're about equal in size, and that was on the way up to $21.21. This month has been spectacular. It's an 11% gain. The key is where we're currently trading at. It is just a couple of cents above the 0.38% retracement. Markets bid at 34. Retracement comes in at 31.7. So it tells me that we could see some softening next month. However, if we break through this price point in a strong manner, we're headed to 1946. The most solid way to illustrate how silver overtook gold in terms of the percentage gain over the last month and a half is simply to look at the gold-silver spot ratio, which was trading just above 93, and this was as recently as July of this year. Look at the fall that we saw back here, and then this week's fall has taken that ratio to 82.71. So we've seen a tremendous decline of about 10 points in the gold-silver ratio. If what we saw this month is the pattern next month, we could see it fall even further. And I would look for levels of support not to come in till about 77 or 78. And although palladium is not at an all-time high, that's here at 1579, as we said at the beginning of the show, it did overtake gold pricing. And if you look at the performance of this week and realize that today alone we had about a $50 gain, you can see that the momentum is absolutely there. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Tuesday following a 3-day weekend. Have a great 3-day weekend. Bye-bye.